So today, our topic is about tax planning 2022, part 2. Last Saturday, we talked about tax planning. And when we were talking about planning, the knowledge we shared is more a fundamental knowledge. It's nothing really going to vary between the years. So whether you are in 2021 or you're in 2022, whichever year you are doing, and the knowledge we shared last Saturday is really universal. It is something that really should be embedded in your understanding with your tax. If you are a successful small business owner, you know those knowledges are so critical. And you want to understand the fundamentals, then you understand the environment we're in. So every time we have a presidential changes, and when the Senate and the House change leadership, and the things are going not exactly the way you think or I think, right? Things just change. So now this 2022 brought to us in August, and there is an Inflation Reduction Act came out, right? So you heard of it. And what did that do to you? And we can talk about that. And at the same time, let's just kind of summarize the differences between 2021 and 2022. Some of you are still doing your 2021 taxes, but the one you finished 2021, you know that you're in 2022 right now. It is so important for you to understand that what you can do right now. We're not done with the year 2022 yet. Magic can still play and you can still plan. And our firm, we offer tax planning services to successful small business owners. And if you have a business that's making good money and you're also paying good taxes, and maybe you're a candidate to look at your tax efficiency and to see whether you can get to the place where you pay taxes all right, but you don't need to pay tips to IRS. IRS don't really need you to pay tips to them. They want you to keep the money so you can grow businesses, so you can hire more people, and then you can put, better product on the market, right? So that is really what our government is trying to do, and we understand. So what we are doing is not contradict to what the government want to accomplish. And as our firm, Community CPA, we want to make that small contribution to the economy. We are to keep our business people in business, make them successful. When a small business is successful, that means more payroll taxes, more people employed, and a peaceful community, happy life, right? So we are so important. And I tell people that when we think of a success, a one-person success actually can have this domino effect to make many other people be successful. So having one small business successful, it actually creates the ripple effect into the community. It is very important. One last thing before we knock into the content, no responsibility disclaimer, and always learning things with your own judgment. Don't let people tell you what to do. And as a great, smart, successful business owner, how could you let other people's opinion to dominating your thought, right? You want to take what they say, add your own ingredients, make it yours. And if you really want to rely on our knowledge to make critical decisions, whether you should sell your business and how much you should evaluate your business, and whether you are paying too much taxes or paying too little, when you make those critical decisions in your business, you can contract, you can hire Community CPA to serve you. That's our job. We are here to serve you Monday to Saturday. Do you know that we open on Saturday? Just so you know, if you call our office on Saturday, we are open. So we always have someone picking up the call and figure out what you need and getting things done just like you called us on Monday. All right, 2021 tax incentives expired. There's a lot of tax incentives expires in 2020 at the end of 2021. So while we celebrate New Year of 2022, say goodbye to these incentives. Okay, so let me run them through so you know what we're talking about. And remember the research and development expenditures. And before 2022, before the, oh, did I say January 1st, 2022? I mean to say January the 1st, 2023. What am I talking about, right? I tell you why I get this 2022, 2023 kind of messed up, because you know that the reality is we're working on 2021 taxes the whole year. So sometimes, and with tax people, and you can trust their feelings of the year, because their body is in 2022, but their mind and the soul all in 2021. So I have to shake that up, and it goes, oh yeah, you're in 2022. So 2021 incentives expires. That means in 2022, when we get to 2023 to file our taxes, these are the things you can't do anymore. Okay, so research and development expenditures, those ones, the company can deduct the cost and immediately, as a cost, then reduce your taxable income, then you save taxes immediately. But starting from 2022, and now you are doing 2022 tax return in 2023, and the IRS will produce their magic tax forms. So on the forms, there will be instruction to tell you that, no, you have to spread out those expenses. You cannot do the deduction in one shot anymore. So that's one expiration. The other expiration, there's more to come. So this one is a little technical, but let me explain this to you. And don't get really confused with this abbreviation, EBITDA and EBIT. And that EBIT just means that your earning can be smaller, because the earnings you made, you can deduct the interest, you can deduct taxes you paid, you can deduct depreciation, you can deduct amortization. So the EBITA means smaller profit. The EBIT means a little bigger profit. So now we understand these two concepts before January the 1st, 2020. Okay, before, long time ago, not long time ago, pandemic ago, company can deduct the net interest expense as long as they are making the earnings. So let's say the EBITA earnings is $100. That means they can deduct the interest $100. If it is interest is too much, they cannot deduct anymore. But because EBITA is bigger than EBIT, so after the January the 1st, 2020 to the end of 2022, okay, to the before the 2022, which is the end of 2021, December 31st, okay, then you can deduct your interest that is 30% of the $100. So 30%. And starting from this year, and is 30% of EBIT, so smaller profit. So in one way to explain this to you, you know how in business you have this interest expense, you want to run them off as expense to deduct them, right? So you have a limitation, and in 2022, you deduct less than what you would otherwise do in before. So that's really the slide, the spirit of slide, just to say to you that the tax incentive expired, and you now are going back to EBIT calculation, no longer EBITDA, depreciation, amortization, added into it. So your profit, your earning calculation is actually bigger, and your earning calculation bigger, and then when you excess of 30% of that, then your interest deduction is limited to it. So just kind of understand the spirit of the deduction on interest. Interest deduction limitation changed, and with this 2022 coming in. And 2021 tax incentive expires. Expansion of child tax credit. We know that one. When we have a child, if they're little, they got 3,600. If they're not so little, and between 6 to 17, they got 3,000. Remember that? You got that on your 2021 tax return. But that expires when you prepare your 2022 tax return in 2023, and you will realize that your refund is a little less, even if everything is the same. So that's the child tax credit expires. And expansion of earned income tax credit also expired because they were giving you more for the earned income tax credit. They expanded, number one, they expanded the dollar amount. Number two, they expanded to younger age of working adult. So all of that is reverted. And for 2021, yes, you got that. But in 2023, when you file your 2022 tax return, you will know that you went back to before. And remember, all of these incentives has so much to do with pandemic, right? It is the government way to give you more cash into your pocket so you can actually survive during the pandemic. But 2022 come through. By the time we get into 2023, pandemic is probably a past tense in our language anymore. And then of course, 2022, there's still people are airy about this and won't, still are trying to not come out and trying to do things in limited ways, but those are minority, wouldn't you say? So those people, and they will realize that 2022 is already a normal year from tax standpoint. Those incentives are gone, okay? And then what else? Child and dependent care is also that way. So this one is going to revert back. You did have more money to coming to you as a tax credit, but it's not anymore. And they are going back. And so making it 1,200 for 2 or more dependents, child care, tax credit, okay? So these are the 3 major ones. Young families cares that a lot. And so know that if you want to see what that would be, you want to look at your tax return, and that, the tax return that in 2019, that will give you the right answer. So those are the numbers we had before pandemic comes, things changed. Actually started from 2021, because when 2021 years, we were doing 2020, and then we had the CARES Act and the Job Act, all of these things coming through. And then you had a 2022, you were doing 2021 tax return, you had those values, you had those incentives still going. But when you do 2022 tax return in 2023, you will see them fall off. All right, so the reason we mention these things, folks, is because we're talking about 2022 tax planning. And now you know that you are losing some of those credit, maybe, and you were getting some refunds because of those incentives in 2021. Now you know 2022, those incentives are not there. Maybe you should pay in some estimated tax. So it is a good time to really reconsider where you are on the tax position, calculate reducing your child tax credit, reducing your earned income tax credit, reducing your child tax care credit, and see where you're gonna be, and then making sure that you don't owe taxes, right? Charitable contribution also change. And remember, when we have a standard deduction coming through, we can still do $600 deduction on the outside of Schedule A, right? So that was the incentives come with CARES Act. And now here, and in 2022, or additional $600 deduction if your charitable contribution could not make it over the standard deduction, then your charitable contribution basically is not useful. Am I right? Because it doesn't really help you. You still have your standard deduction for Schedule A. And so someone was asking me that, then in what's generally speaking, my charitable donation should be, even allow me to to generate some deduction. Remember, President Trump had eliminated the taxes on Schedule A, and you know how we used to calculate the car tag and property tax, and also here in the Midwest, our state taxes is all going in there. So they add up to be a pretty big number if your income is high, right? And that will become your itemized deduction number. So we can deduct a lot more than $25,000. But now that standard goal, not only the itemized deduction standard amount is 25,000, is a little higher than before, but President Trump limited the tax dollar to only be 10,000. So we can really, it doesn't matter how much state taxes you pay, property tax you pay. I mean, the property tax for a residential home is over 10,000 just for that. Never mind about income tax, right? So once that got eliminated, you can only do 10,000. That means for charitable donation, if you don't have mortgages there for you, for charitable donation, you need to have at least $15,000 in there before it can show up for the first dollar on your deduction. So it is very disadvantageous. On the surface, it's almost discouraging people to donate, discouraging ordinary people to donate, because there's no more incentive really for any household, making an ordinary income under $100,000. So with that said, and in one of the articles I wrote for Women of Worth for a while, I talked about donations. People donate. And if you really are still in the place where you donate for tax incentives, and that would be so limited unless you are ultra wealthy, that makes sense. If you are not wealthy, if you're struggling day in, day out, charitable donation doesn't do a thing for you. So we donate not because of our tax incentives, and we donate because we believe in the mission of the nonprofit. We donate for the commonwealth of the community. We donate for the better community. So, that is what is a calling for donation. It's just not so much tax incentives that can pull out to make you excited and then start donating. No, it's not there. But I still see people donating, and I still see my clients and putting in their church ties, and even though that doesn't generate any benefit. So people are good people, let's say it this way. And a lot of people are much better than those politicians. All right, stop me from talking about politics, which I'm actually monitoring it really, really actively, but I don't really, I shouldn't be bringing that into the internet because I don't have the time. I really need to go through these incentives, expiration, and the new Inflation Reduction Act with you, so you know what's coming. And folks, you know that ERC is done, right? So this is an incentive that expired, but ERC is done. I'm not saying that it's done for you to apply. You can still apply for ERC if you have not. And ERC timeline is done at December 31st, 2021. So right now, you know that anything happens in 2022 right now, this year has nothing to do with taxes, with the ERC, but you do have ERC from before. If you are qualified, just don't forget to claim. You have up to 2024 to claim your ERC. So you have time, and you have time, and then make sure, because of you have time, IRS also have time, and they have time to examine you. So when you claim for ERC, folks, the best idea is to have professionals get you eligibility study done. You do not want to just listen to some companies, and they're not CPA firm, they're not regulated by any government bodies. They come over and it goes, I can claim $500,000 for you on ERC. Of course, if you want to just fill out a form, goes to IRS and get money, that's easy. You can do that. But it doesn't mean It is right. So you want to make sure your eligibility is done before you do ERC claim. All right. So now we talked about all these expirations of tax incentives. Now let's focus on this Inflation Reduction Act. And this one came to law on August 16, 2022. So it's new. So it is new. When I say things are new, you know what that means to me? That means to me that the interpretation of such an act is not really out yet. There's a bunch of people on the internet will do their own understanding and then, explanation, knowing that the authoritative authoritative explanation are coming from trade organizations. For example, that would come from AICPA, and those organizations come from the nonprofit who are actually focused on energy, and I think is funded by Department of Energy. And we will look at the website. I found the website is really useful. I'll show you. So you want to look for authoritative sources for these explanation. Like Journal of Accountancy is one place that I look up a lot of interpretations, from accounting standpoint, because accountants are, I'll tell you, and in terms of interpretation, accountants are so cool. They are laid back. They are not they don't act like politicians. They're pretty methodical. So they are kind of the cool populations who can put things as what it stands instead of putting a lot of emotions to it. It just, accountants can be boring, right? People like me can be very boring. And I'm one of the few that not so boring, but I can see myself becoming that way if I just dive into the paper and I just look at the paper and not talking to you. But as soon as I talk to you and I know I cannot just look at the paper, I have to explain it. So this Inflation Reduction Act came into law in August. So it's new. There's a lot of things that we need to look at. So one frequent question, in fact, one of the phone call I got from a taxpayer is to ask me whether the tax rate is going up because of the Inflation Reduction Act. So the answer is no. The tax rate stays the same from 2021, 2022. They're the same, you see. But the bracket, like from what number to what number you pay 10%, these will be slightly adjusted for inflation. So the rate is the same, and it did consider inflation, probably not 9%. The latest I saw is 9.5% on inflation right now. So it is quite a bit inflation. So now let's take a look at the Inflation Reduction Act in several areas. Is the healthcare area. So why are we talking about this? Because this, how we Affordable Care Act, it has been, there for us. So some people, when you have a low income, you can go onto the open market to buy the health insurance. And if you overpaid, you got a refund. If you underpaid, you made too much money, then you pay it back, right? So that is still there, extended to 2025. So basically, on the healthcare side, for the open market, for the premium, for the insurance, that it is going to be the same. So don't need to, in a hurry, to look for new coverage. If you are a successful small business, you already settled with your provider, you already know your premiums is what, and you know that November comes and you're going to renew, right? The open market coming to renew in November. So those are stay the same. And that's a comfort. Then there's some details I want to mention to you is that when you buy insurance from the open market, what they offer is a free vaccine, $35 per month insulin to people who needed that, all the way to 2023, and the cap the out-of-pocket drug cost to you at $4,000 or less in 2024, and settling at $2,000 per person and per year in 2025. See, this is an Inflation Reduction Act. They are extending their reach all the way to what? to 2025. So this is what you need to know, that, from this angle, looking at this package, I would say your healthcare side of things is pretty stable. So there's not much of a rocking issue for you, and will allow you to continue buy the lower premium through the health insurance marketplace. So that is one, because it is good when settles our essentials, right? Settles your essential needs if you are relying on those insurance marketplace purchase for your business, for your own health insurance, or for your employees, right? One is related to clean vehicle credit. This is the credit that folks are familiar with, that because when you buy a Tesla car before, and you can have $7,500 tax credit on your 1040, right? So as long as you provide the VIN number, and as long as they're what they call that, the sales cap did not go over, then you're good. And I'll tell you that the sales cap for Teslas is all topped already. So if you buy their car in 2022, and like before the end of the 2022, December 31st, 2022, and you won't get that, because even though the credit is available to you, but their cap is over, so you don't get it. And you probably ask me, oh, can you tell me which vehicle? I'm going to show you, but what I want to tell you is that if you're planning to get that tax incentives, and you're looking at 2023, folks, not right now. Of course. And in all of these things we're talking about, the tax credit and stuff, and you need to be under the income threshold. So I put that right there for you, income limitation, right? So if you are a single person, you want to buy a electronic vehicle, they call them clean vehicle now. So if you want to qualify for clean vehicle credit, and your AGI, your modified AGI, cannot be over $150,000 a year. So in 2023, plan your taxes. Make sure you are under that. Then you get your $7,500 credit. If you say, well, if I'm under that, I don't even need to pay that much taxes, how am I going to use the credit? No worries. You can carry the credit to the future years, right? So with that said, and I just want to kind of give you a little bit of clean thought related to this. And effective August 17, 2022 is a cut, because the Inflation Reduction Act becoming effective, right, on the 17th. So after August 17, which is where we are already in this time, and August 17, 2022 to the end of 2022, and if you buy a car, you buy a electronic vehicle, you want to qualify for the clean vehicle credit. And remember one, and you have to make sure the manufacturer's cap is not exceeded yet. That's number one. Number two, you must to make sure that the final assembly of that car is in North America. See, I didn't say it is in United States of America. It's in North America. So you're probably going to say, are you kidding? The manufacturer to figure out whether their final assembly is in North America. No, you don't need to do that. There is a list for you on internet, and I will show you, and you can see who is not exceeding, who is exceeding. So these two conditions are regulated. So if you are if you want those credit, and you want to make sure that you meet those conditions, otherwise you're not going to have it, even though it's available to other people. Okay, but after 2022, in 2023, there here. So the only requirement would be the final assembly to be in North America. Then you can pull out the list. You can buy all kind of electronic vehicle you wanted. Isn't that cool? So in the act, it's also said that, after 2024, they will be building the credit into the dealership. So that way you as a taxpayer don't have to mess around with your 1040 return. And maybe because of that, you feel like you have to go to Ying to get your taxes done. You couldn't do it yourself. You're too afraid of doing it wrong. I mean, then you don't have to. You can do it yourself because the dealership will do that for you. So that would be 2024 and beyond. But for the clean vehicle credit, folks, you got it, right? And that is really what you can take advantage. And the 7,500 tax credit is a lot. Tax credit means that if you paid $7,500 taxes, you get that whole taxes back. It is almost acting like the child tax credit, the earned income tax credit, folks, right? So they give the money back to you. So that is a really a good tax planning tools. And so yeah, your purchase is related to that. So our next slide is related to home improvement credit. And I tell you that I'm going to have another webinar, and maybe not Saturday. I have to talk to my manager, Catherine, because she manages the webinars here. And I need to talk to her to see whether we can expand it into details. And I'm going to give you a list of even your hot water boilers and your electronic transmitter box, and all of these things applies. And I think, you know, there's some good information out there that I can put it together for you to have this home improvement credit. So generally speaking, I just want you to know that before in 2022, the credit will be equal to 10% of the cost of all eligible home improvement made during the year. A total combined credit lifetime limitation of 500. They don't seem to be a lot, but you have to remember this is a tax credit. Tax credit 5%, the $500 actually means that income reduction at least 5,000. So they are, you know, they're not apple to apple comparison, right? So since 2023, so starting next year, the credit will be equal to 30% of the cost of all eligible home improvement. I know this eligible home improvements make you wonder, and you will be like, Ying, I want to know what is eligible home improvement. That's what I want to set another time to explain that to you in great detail. And you want to know because a lot of this coming in 2023, when we go into 2023, we're dealing with 2022, but we are actually should be knowing what we want for 2023. We want an electronic car, and we want energy efficient home improvement. We want to calculate what taxes we're going to save. So all of that, that's 2023. So 500 lifetime limit on total credit amount will be replaced with 1,200 in 2023. So those are the things, you know, all of these governmental tax maneuver, I'll tell you it with one simple tools to guide spending. The government want to guide our spending because we are attracted by what they want to give us. So we spend our money in a certain way. And that is how the government plans globally or countrywide of what they want to accomplish. So you can tell the difference between the two White House now on the energy approach, and is very different. And you know, it has this, you know, every government carries its own, their own agenda. But this agenda right now in front of us is everything possible to make your home more energy efficient. And they are bundling that up into Inflation Reduction Act. And I'm actually thinking that it's not exactly just because you spend this, so inflation will reduce. No, what they are doing is they want to reduce inflation, increase production. So just guiding us to go there to spend money, so to prompt this line reduction to go up. So it's not inflation reduction, it's on the improvement. It is home improvement kind of incentive will help the inflation reduction. So, but obviously they can do other things to help inflation reduction. For example, they could make marijuana legal and start producing all kind of, CBD product, and those can help inflation as well. I mean, so any spending, any productivities in the country would help, but the government obviously is tying the result and the trigger with the energy efficiency. So you can see that very clearly in this Inflation Reduction Act. Then now, so this is the ratio, and we want you to know, because this is actually related to the energy efficiency and the solar panels, all of these things that now people are already working on. And you hear the commercials, wow, you can get this all done for free. And so, which is a combination of the money you borrow, combination of the tax you save, then they calculate it for you. Kind of, to me, is a little phantom, a little bit abstract, but in reality, what the government is doing is that to give you 26% of your spending back between 2020, 2022, but in 2023 is reduced it to 20%, after the changes, you see how this is before, right? But the Inflation Reduction Act told us that, okay, don't worry, it is not 22% anymore, it is 30%. It's going to go on for like 9 years. So that's what they're doing, you see? And right here, 30%, 26%, 22%. These percentage representing the deduction of your total cost. That is what they're doing. All right. And with Inflation Reduction Act, and it is also has actually a big twist. It's not a small twist. It's a big one. And you know how you have the R&D credit? R&D credit normally is a credit towards to your income tax. So what they're doing right now here is against employer payroll tax. So what that means? That means that for people who claim R&D credit, you probably need to have a pretty sizable operation. If you don't have employees all over the place, where do you get the payroll tax? You don't really have a lot of payroll tax. So that's where that is. So, Inflation Reduction Act, sometimes I'm actually amazed with how the politicians actually knew what's gonna drive what. I mean, a lot of them are lawyers, so they're really smart, but still, come down to accountant level, I'm impressed. So when they do stuff like that, I'm just like, oh, great. And that of course gives a lot of new work for CPA firms like Community CPA. I always say that the firm survives on economic upgrades. So when we are going through recession, there will be people not successful and that left the business world, but the people who are successful and through recession or sustained through recession, when they come up, this is economic reorganization. This is a global commerce redivide the shares of economy, redivide customers. So there's a lot of that going on even among the CPA firms. I mean, there's a lot of merger and acquisition going on. There's a lot of clients moving. So these are what I call the redivide. And these Inflation Reduction Act kind of action from the government is to assist that redivide. So you really want to understand what the government is doing. So apply to your own business. So for me, I think of those changes. I'll come up with plan how to talk to my client and coach them to do what they need to do. And when I do my year-end tax planning with my client, with my very successful small business clients, I'll use all the tools to figure out where they go and what they do. They can save taxes efficiently and legitimately, right? So that is the important part. When there's a lot of changes in the legislature related to taxes, it is a time to really tie yourself with the reliable sources, have people think for you. Because how much can you think as a business owner? You already have your business all over the place, and now you want to be tax expert? No, don't be tax expert. and they'll wear you out, and it will put white hairs on you, you know, unless you are tax professionals like experts, and you know, we're used to it. So you know, those changes only make us see more opportunities. So I don't see the dark side of it, and I just see that to be more opportunities for community CPA and more opportunities for our successful clients. Now, this is my last slide. And the Inflation Reduction Act, and then this Inflation Reduction Act had add-on started from next year. So not 2022, you still have your 2022 is 21% on the C corporation. There's a 15% minimum tax on corporation with over 1 billion in revenue. Hey, in revenue, not in profit. So there is a target on the bigger corporation. When you have so much revenue, pay more taxes. I don't think it is wrong. And I think if I were one of those billions corporation, I think it is my fiduciary duties to pay taxes. And I do not know how our President Trump can get away from paying zero taxes. And that doesn't sound right. But as long as there's no final decision on what he did, I would assume he is so smart and his accountant is so smart if they don't go to jail, and they did a good tax planning, right? So I admire them in many ways. So starting from 2023, 1% excess tax on corporation share buybacks. Yes, Elon Musk gonna do that again, and he'll have to pay 1% excess tax. So those are the things big boys are doing. They are playing, and I always tell my small businesses that we may be not doing it in the scale, making ourselves on the news, but those are things you want to know, because you know, even if you did a corporation share buyback and you know, for a small amount, but knowing that the government started this 1% excess tax on it, and you want to replan your strategy, right? So these are, you know, little business doesn't mean that we don't have these things approached to us. I know that 1 billion in revenue would not come to any of my clients. You know, our largest client is, you know, is about 180 millions in 2022. So we don't have a billion revenue clients yet. But I bet you in my clientele, and there will be people going there, because I have seen them being so successful. And we had 2 clients in my book, and they grew so big. So they left us, went to KPMG. One of them went to KPMG, the other one went to McLeod Pullen. And so we lost them because our firm is too small for their big bird. So we I understand that, but those are the things I want to see us growing with our client. So when you are 1 billion in revenue, and we also are able to take care of you. So I need all of your support to make Community CPA be the one that can have people pay 15% minimum tax on corporation, because we have over 1 billion revenue and clients on our book. That would be amazing, right? All right, so this is a good summary of what's going on for 2022. So what's your overall impression, folks? What's your overall impression? And when we reach to 2023, we start doing 2022 tax return. What's your impression? You will get less, right? That's general impression. You will get less refund, and you have a lot to think about. So maybe tax planning for 2022 is really needed. Just think about that. Our firm, we do tax planning for our client, and in the last quarter of the year. So our client, especially our business client who are with us for years, they knew that they will bring us the budgeted, the estimated 1 year financial statement. They will come over, and we do planning right now. So before December 31st, 2022 ends, and you already put in all the things you need to put in, so you don't end up paying taxes, folks. So think about it. This is what we are talking about. When you plan your 2022 tax, and you will do better. There is no surprise when you arrive 2023, then you say, oh, I wish I did this. I wish I did that. There's no such a thing. There's no regret pill, effectively reverse your tax bill. And so you just need to be proactive and work on your tax planning, work on your tax strategy, and do it right, and know what's coming. And while you are doing 2022 tax planning, you already know what your 2023 should be doing for the major first part of 2023. All right. This is our contact information for anything you'd like to know. And please contact Catherine. And before I end, I do want to show you the list of vehicles that was final assembled in North America, because I know that is something you want to know. And know that we open Monday to Saturday, folks. So when you have time on Saturday, you can call us. We're still open, and we just want to be that CPA firm who is totally different from those firms that in the high-rise building and labeled by somebody's last name. No, we are community-driven, community-focused, benefiting community type of CPA firm. We care about you, and we put our name out there as a communitycpa.com as our promise. So let me end the slide so you will see, this is the place that give you the model of the year and also electronic vehicle assembled in North America. Did you see that? So this is all kind of, these are the vehicles that qualifies for that clean vehicle tax credit. But there are things that already says met. So look at Tesla, folks. There's nothing not met, and Tesla is gone. And if you buy Tesla right now, well, you will be the one that don't care about the tax credit. All right. So, and this website is actually from the US Department of Energy. So you go to US Department of Energy, or you just type in the electronic vehicle with final assembly in North America. It will give you the list. So print out this list right now, and then you can go shopping. But between August 17, 2022 to December 31st, 2022, if you buy electronic vehicle, you buy it over here because you meet the two conditions. But of course, your income is also a limitation, right? And make sure, but in 2023, you don't have to care about the notes part, this part anymore. In 2023, you're just gonna have your vehicle as long as your income, as long as it's coming out of this list, you're good. You can get the credit. I'll talk to you again. Bye-bye.